Hey traders, it's John Fortune here with this week's weekly Forex forecast. I hope everybody's having a great weekend. Last week we had that blockbuster jobs data out of the US and it caused an outside week in the DXY, a major reversal here technically. And we closed the week right at the 102.992, the 2-year breakout level. And going into next week, for the first time since we started selling off, the scorecards data is pointing towards a bottom in the dollar. So quick look at the economic calendar, and last week was a very busy week in terms of risk event. There was lots of risk around these news events of reversals of volatility last week. But the main thing last week, we had FOMC, Bank of England interest rate decision, and also out of the EU. All of these more or less went as expected. There were no surprises in the rate hikes. But it was the non-farm payrolls data. We also had ISM, which was important last week, but it was the non-farm payrolls data, this huge, stunning 517 number versus the consensus. As you can see, if I scroll up to the top of the calendar here, what was forecasted or what was consensus was 193,000. It came out 517,000. To put this into context, this was about 8 standard deviations above what was expected. The probabilities of that happening are close to 0. So when you get something that anomalous, you have to look and ask yourself if there are not some issues there and maybe the number is incorrect. However, we don't want to be the people who sit here denying incoming data and pretending, oh, well, maybe that's not correct, etc., etc. We have to take that on face value. It was a significant number, and it does affect the markets coming up this week. If we have a quick look at the calendar this week, there's not too much going on. It's only an interest rate decision out of Australia. Apart from that, we pretty much have a clear run. Now, most of that event risk is out of the way with all of the data that came out last week. So a pretty clear run, and we will be looking at a couple of Aussie pairs we can play both ways off of this interest rate decision next week. Okay, so if we look at the scorecards for the coming week, you can see after all of that data that we had last week and we input into the scorecard system that we are getting some significant changes. And the first thing to note, and probably the most important for a general market perspective here, is the US dollar. For the first time in the scorecards since we started selling off, it is suggesting on a 4-week rolling probability basis that we are now seeing a near-term bottom in the dollar. And that's because we went from -3 to -2. So we're getting that troughing in the scorecards of the rolling probabilities of the dollar. Now, alongside that, what's also interesting is the euro is also highlighted in the scorecard system on a 4-week rolling basis to be relatively quite strong. Now, what this is implying is a general risk off sentiment coming into the markets, because the euro and the dollar, although the euro tends to decline against the dollar in risk off, both the euro and the dollar, for example, will rally against commodity currencies like the Aussie, like the New Zealand, in a risk off scenario. And the third and final thing to note here, which is very important heading into this week, is the pound. The pound has significantly reduced its probability score on a 4-week rolling basis, and it drops out of the positive side and actually enters into the negative side of the scorecards with a -3. So the slight difficulty going into next week is that it does look like we're at a bit of an inflection point. Things are starting to change. And if the dollar is going to potentially be finding a bottom, and the euro is as well, what this does is this allows us to actually look for both euro and dollar plays to the long side heading into next week. And it gives us that kind of synthetic hedge as well. Whereas if we did get some risk on or risk off, we can actually have a couple of opportunities where we can play that both ways. So to summarize what we're looking at here heading into next week, it does look like we're finding a bottom in the dollar. If that's the case, we may see the euro start to weaken over the next few weeks. However, as it currently stands, we're seeing it hold up, and that is suggestive of general risk off. Going into next week, therefore, I would like to play the dollar and the euro to the upside to give us that kind of synthetic hedge when we're looking at these markets. The pound pairs are probably some of the best plays heading into next week on the short side. That is my favorite market that I'm going to be looking at playing next week, pound short positions. And finally, we have the Aussie, which has an interest rate decision next week. We're going to look at a couple of plays, either based on whether we get Aussie strength from that interest rate decision next week or Aussie weakness. So looking to be reactive after the interest rate decision takes place. Okay, so quick look at the individual currencies, and we're looking on the weekly chart here just to have a bigger picture overview of what's going on in the currencies before heading on to the markets themselves. Starting with the dollar, this was the major reversal off of the back of non-farm payrolls, and I've been highlighting the fact previously that this market is in a bull market still, and we've pulled back to the 2-year and the 7-year breakout, and this break below these levels should not be considered as it currently stands. I was saying this before last week, as anything other than just some volatility. Why? Because these are major breakout levels. You're never going to come back and test a 7-year breakout to the pip and start rallying. You're going to come down below it, and on the bigger time frames, you know, this just looks like a wick if you look at a quarterly or a 6-month candle. So you can see, based on last week, just how quickly these things can reverse and can change. We traded into the May lows, and then we reversed on the non-farm payrolls data. So it does look like we're finding a near-term bottom in the dollar, and although it's still negative in the scorecards, again, it's that troughing in the scorecards which is suggesting continued strength in the dollar over the near future. So essentially, you know, going from -3 to -2, but then next week perhaps -1, then to neutral, then to positive. Now, what was interesting about the reversal was that it came from the jobs data, and a good jobs number, because it did look like we were heading into a scenario where this dollar reversal was going to come on a safe haven bid as things started to deteriorate in the US heading towards a recession. However, if that data is correct, and again, when you, as I said before, if you have something that anomalous and the odds of something happening so slim and it actually happens, you do have to question the validity of it. However, we do not want to be, as I said, the people who just dismiss data out of hand and just deny what's happening. So we're going to take it at face value. And if that's the case, what this suggests is, instead of a safe haven bid on a recession fear or on the back of something breaking, at least for the time being, this is pointing towards actually a potential reacceleration of inflation, strong jobs market, and therefore a continuation essentially of the conditions we saw in 2022 driving the dollar higher. I do still think, based on everything I've discussed previously in videos and also been posting on Twitter, we are still heading for quite a deep recession and a market capitulation. But over the next quarter or so, it may be a reacceleration in inflation that proves to be the catalyst to send the dollar higher and for US stocks to actually head lower. Next is the euro. Now, inverse to what we're looking at in the dollar, we pulled back, broke above these major breakout levels. But again, I was saying to you, this shouldn't really be treated as anything other, as it currently stands, as near-term volatility around major breakout levels. We had the inverse of what we saw in the dollar with the engulfing candle, but this time to the downside. And if the dollar is going to find a bottom, as looks likely, this will drag down the euro, as the euro is about 57% of the dollar index. However, if the euro does start to sell off, is it going to sell off as much as some of the other markets? The scorecards are saying no, and that's why, even if this comes down lower, I do favor euro longs vis-a-vis some of these other currencies next week, and also dollar longs vis-a-vis some of those currencies as well. Those are the markets I would be looking to play next week. Next is the pound, and the pound has pulled back. I did in previous videos mention the fact that when you have these flash crashes, markets pull back, retest their highs, and they start to fail. We came up, tested it, we pulled back, and all we did is kind of chop around this area, failed again, and we've started to sell off. This is likely, based on everything we're looking at in the data, a near-term top in the pound, and there's every chance, and I believe we are coming back down to the lows, just as I believe we're coming down to the lows in the euro, and as I believe we're going back to the highs at some point, probably this year, in the dollar index. And this is, in my opinion, where there's never an easy trade in Forex or trading. Trading is not an easy game, but it can be simple. And this is probably where the low-hanging fruit is in terms of making money next week. It's those pound shorts. Those are my top plays, and that is the thing I'm focused on most next week, is those pound short opportunities. Next is the Swiss franc. The Swiss franc is a market which I've highlighted on Twitter at the beginning of the year. I think we're coming up to the 117 area. However, we in the near term are kind of just chopping around, and the scorecard data has not yet given us the signal. It has a little bit in previous weeks shown that the Swiss franc is strengthening a little bit, but we haven't really got a clear bullish signal on it yet. I do think we could probably come down a bit lower, maybe test this again, and I warned recently that we could just consolidate above this. That's what the scorecard data was telling us, that yes, we've got a major breakout. Yes, I think the Swiss franc heads higher this year, but don't be surprised to see this consolidating above this breakout level, because the scorecards were telling us that, and the scorecard data is leading data. And that's exactly what's happened. So going into next week, I'm still keeping my eye out for a bigger break higher in the Swiss franc this year, but timing is everything, and we could be coming back down a little bit lower next week. Still -2 in the scorecards of Swiss franc, so patience required. Next is the yen. Now, we went long on this major breakout in the yen. I say major, I mean in the daily it was a major breakout. If you look at it on the weekly chart, this was the real major breakout down here. But this was a significant reversal, and we played the yen to the upside until we got in this area and the yen started to weaken in the scorecards. It strengthened and then it started to weaken. And the problem is the BOJ firing up the printing press again to defend that 0.5% yield curve control cap, in which case I would not be surprised to see this come down further. So as it currently stands, I don't really see any significant edge, and that's what the scorecards are showing us. Where is our edge? Where are the best opportunities next week? The yen is kind of middle of the road as it currently stands, maybe reversing, so not really interested in the yen pairs too much next week. Next is the CAD. The CAD actually strengthened in the scorecards. Now, crude oil is setting up to be one of the best markets next week. I am looking for shorts in crude oil, and this should weigh on the Canadian dollar. However, with the CAD actually gaining in the scorecards, although still bearish, that tells me that there is a chance that we continue just to consolidate, because that's what the scorecards are really saying. The scorecards showing a weak CAD but slightly stronger, or in other words, not as weak as it was. That signals consolidation. That's why, generally speaking, unless you're range trading, you step out of those markets and you go and look for the ones with the more explosive potential. So the scorecards, as a leading piece of data, are telling us that the CAD is most likely going to correct. And if that's the case, it would make sense technically to come back up and test this high for an A, B, and a C. And I've highlighted in previous videos, this is where I think we see the next leg down in the CAD. And this is likely to happen as the dollar starts to rally as well. We should also see the VIX pick up in this scenario. All of this adds weight to a failed breakout in stocks in the near future. Next is the Aussie. We came up and tested the previous high in the weekly, and we sold off big outside candle last week. I do think the Aussie heads back down, possibly even to this low, and also this low, as the dollar rallies and as the other markets also sell off, as we've just looked at. However, inflation recently picked up in Australia more than expected, and that does point towards potentially the Reserve Bank of Australia having to do a bit more, maybe even surprising to the upside next week. So bear that in mind going into the interest rate decision. Although this looks like a fantastic short technically, as it currently stands fundamentally, it may actually hold up a bit better than expected. We need to see what that decision is from the RBA next week and what they say. And I'm going to be looking at two pairs where we can play this both ways next week. And finally, the New Zealand dollar. I have been warning for a number of weeks that this was unsustainable. This was setting up to be quite a severe mispricing, because after the rally we had from the COVID lows when we had max stimulus out of the US, we had a very similar rally essentially on the Fed hiking, but just at a slower pace. I mean, interest rates are at 4.75% in this area, and we have pretty much the same rally as when we had max stimulus from the Fed after COVID. That means that that is essentially a mispricing, and I've been saying to you that this rally in the New Zealand dollar is likely coming to an end, where I said to you we could come a little bit higher, could test this high, could even test this high, very similar to the Aussie dollar we just looked at, but we are running out of road, and last week with that massive reversal is the catalyst to send this market back down to the lows over the coming months. Okay, so having looked at the individual currencies and how that dollar index is likely finding a near-term bottom, and a number of these could be heading back down to their lows, in the weekly chart, this is the S&P 500 that we looked at, and I highlighted this major inverse head and shoulders breakout to the upside. everything we've discussed, especially if the jobs data is correct and the jobs market is that tight and inflation is likely to tick higher, which is the case as well if the jobs data is correct. This adds weight to the idea that this breakout is likely going to fail. As the dollar rallies, we get risk off, and this is going to weigh on stocks. Why? Because the market are going to be looking at that and saying, if that jobs data is correct and inflation is going to pick up, the Fed are essentially slowing down too early. They're going to have to do more, and the terminal rate is going to go higher. And that is what's going to add weight to the downside in stock. So to be fair, this has not yet failed. This breakout has not yet failed, but the coming weeks are going to determine whether this breakout fails or not in all probability. And as I said to you before, the data suggests the odds are that it does in fact fail in the near future and we start to head lower, and this turns into an A, a B, and a C before the next leg down, at least to the lows, and then probably further. Okay, so let's look at the markets heading into next week, starting with crude oil, highlighted in gold. Why? Because this is one of my top markets that I'm going to be interested in next week. Really nice sell-off as we got risk off coming into the markets on that non-farm payrolls data, and as you can see, we've got momentum breaking down now. Very good chance, in my opinion, we come down to the lows and probably down to the 6,950 area. So any pullback in this market should be considered an opportunity to look for potential shorts down to roughly the 69.50 area. The first Forex pair we're looking at is Euro Pound. It does look like we're in a third wave essentially here, because you can see here is the breakout, the inverse head and shoulders breakout, and we have this high low. Here's the break with momentum. Sellers capitulate in this area. New traders add longs on the breakout. That's that breakout mechanics which drive third waves higher. Any pullback in this market is simply viewed as an opportunity to look for bullish setups. I'm going to be looking up towards the 90, or I should say 0.9040. Next is Euro New Zealand. Really choppy market, and stayed out of this chop the whole way here. However, we are now starting to break higher. Any pullback in this market next week is simply viewed as essentially a bull flag, an opportunity to look for long positions up to the 1.7250 area. If we start to break above here, this is where the odds turn against you for further upside, so you can consider this as a max profit taking target area here. Next is Euro Dollar. We came right into the max target area last week, where I said to you, if you start to get above here, this is where the odds turn against you, and look what happened. We declined right from this area. Coming into this week, I do put Euro Dollar in here every single week, and it does look like on balance we could be coming lower. Now you might say, well John, the euro is the strongest and the US dollar is actually the weakest in the scorecards. That is true, but with that catalyst last week and the data that we put in last week, we're getting that potential trough. So it's telling you, although this is the case now, going forwards that may change. So I haven't highlighted this in gold, because why short euro dollar if you can short pound dollar? And the pound is going to underperform the euro. You know, for example, euro pound heads higher. So to me, it's not one of the best opportunities, but on balance, if you are going to trade it, because I know a number of you like to trade euro dollar, but if you like to trade euro dollar, this is the bias that I would have in euro dollar. Any pullback, I would be looking for further declines down to the 1.0650 area. And the final euro pair here is euro franc. Now, euro pound to the upside, euro New Zealand to the upside, euro dollar to the downside. All of those three markets are risk off. What we're looking at here, euro franc, is this is a risk on pair. So you can consider, and I've structured this the same way down here, pound dollar risk off, New Zealand dollar risk off, US dollar CAD risk off, US dollar franc risk on. So euro franc and US dollar franc, you could consider these as kind of plan B setups. We've got euro pound, euro New Zealand, euro dollar risk off, pound dollar, New Zealand dollar, US dollar CAD risk off. So those six markets, and these four here primarily as the best ones, those are my main markets I'd be looking at in the majors next week. But if that fails to materialize, it's always a good idea to have markets where you can be reactive and trade in the other direction. Euro franc and US dollar franc would be the risk on markets. So any pullback in this market, and again, I'd be quite happy not to trade euro franc if all of these start to play out. But if you start to get risk on, for whatever reason, this would be the opportunity in euro franc up to roughly the 1.0080. You can look at this high up here, or potentially even this high up here as a kind of max profit taking opportunity. Pound dollar, this is one of my favorite opportunities outside of euro pound next week. You can see the big sell-off, and this is the double top area down here. This is where we came up, tested the high, and we failed. And you can see you got a mini double top over here, which reversed price, and this is a bigger double top. This is actually the confirmation point of the major double top. If I zoom out a little bit here, you can see this is the major double top. This is where it's confirmed on a breakdown here. So interestingly, with pound dollar, any pullback, really nice momentum on this breakout. Any pullback in this market would be viewed as an opportunity to look for further declines down to roughly the 1.1900 area, down towards this low. But once we break this low, this is actually the start of a potential much bigger move to the downside because it's a confirmed major double top break. Next is New Zealand dollar, and this is the final out of these Forex markets here, the final favorite market. I do also like silver to the downside. But in New Zealand dollar, you can see, again, we have a bigger double top, and we also have this kind of double top over here as well, broken down here. So any pullback in this market, and look at the momentum, momentum precedes price. Any pullback in this market is viewed as an opportunity to look for shorts down to the major double top breakout level of the, let's say the 0.62 area, but I wouldn't be surprised to see it come out and take out this low. Next is US dollar CAD. Now this is risk off. If we do get risk off, especially if stocks really start to fail below that breakout point, which I've highlighted, I would expect to see US dollar CAD rallying, and you can see the choppy nature of this, lacking momentum, really struggling to break down below these lows. Very often that's a sign of a near-term bottom. So any pullback in this market next week, I'd be looking for this potential inverse head and shoulders, and I'm going to be looking up towards, as a max profit taking opportunity point, the 1.3530 area roughly. Just bear in mind, not highlighted in gold. Why? Because the CAD may actually have a little bit of near-term corrective strength. So I favor these two markets over and above US dollar CAD. And the final market is US dollar franc. So again, there's 8 Forex pairs here. These are the 6 risk off pairs. Out of those, these 4 are my favorite opportunities. And the franc pair here, in terms of US dollar franc, but also euro franc up here, this is if we get risk on, and we still see a strengthening of the dollar, but we kind of get some near-term risk on, and these risk off setups don't work. It's that backup plan. Any pullback in this market would be the opportunity to look for bullish breakout into the 0.9370 area. Okay, so finishing up with the Aussie pairs here for Forex, we came down, took out the target to the point right into this target area, and that was in fact the low for the week in pound dollar. Heading into this week, if we start to correct and consolidate, as is usually the case before an interest rate decision, and then we get Australian strength, especially if we see the RBA surprising to the upside because of that recent hotter than expected inflation, any sell-off to the downside here in pound Aussie, because the pound short, that's really what I favor next week. Any sell-off would be viewed as an opportunity to look for a follow-through into the 1.7160 area. And the final Forex pair is Aussie dollar. If we get a consolidation, a correction into, and we get even a bit of a downward slope in head and shoulders here, into the RBA meeting, and for whatever reason, the RBA underwhelm, and we get a sell-off, a weakening of the Australian dollar as opposed to a strengthening over here, then any break lower and a pullback would be viewed as the opportunity to look for shorts in this market into the 0.6800 area. Okay, so wrapping up the video with gold, silver, and Bitcoin, we can see the gold-silver ratio break into new highs after consolidation. I do favor both gold and silver to the downside, but silver shorts are my favorite play out of those two next week. Big sell-off in gold to the downside on that non-farm payrolls data. Nice double top reversal in this market. If we can pull back, especially if we pull back and retest this breakout, any correction is viewed as an opportunity to look for shorts into the 18250 area. Next is silver. We came up and took out the target area, and I said to you last week, this is where the odds start to turn against you. We took it out and we reversed on that non-farm payrolls data. Going into this week, really nice breakout to the downside with momentum. So any pullback in this market is viewed as an opportunity to look for shorts down to the 21.50 area. And this is alongside the other markets highlighted in gold. This is my 6th favorite market heading into next week. And last but not least, we have Bitcoin. I do think as risk off starts to take over, Bitcoin is likely to come lower, but you can see it's still trending to the upside currently. So I don't see this as a particularly great setup, but I put Bitcoin in every single week. What I would like to see is, you can see we're struggling with momentum here. If we get that double top reversal next week and then a pullback, that would be the opportunity to look for shorts into the 2060 area roughly. As it stands, if you go short here, you run the risk of this pushing a bit higher. So if you are trading Bitcoin to the downside, I would look for that reversal first before starting to get short. So that is it for me for this week, guys. As always, I hope you enjoyed today's video, and if you did, why not consider joining us in the room each day where I go through these markets and the setups that I'm personally looking at with members on a daily basis for over 75 markets in different asset classes, including stocks, bonds, Forex, and commodities. So if you'd like to know more about the benefits of GMT membership, why not check out the link in the description below and in the pinned comment where you can get a 2-week free trial totally risk-free. So have a fantastic weekend. I'll see you all next week.